NVIDIA just printed a move that looks like a retail trap and smells like an institutional reload. Right now, the stock is at 197.58, down another 1.25% overnight, after a wave of AI efficiency panic hammered chip stocks across the board. But here's what they're not telling you. Below the surface, the monthly trend is still a screaming strong buy, and there is one danger zone and one hidden opportunity right now. I'll show you both. On screen for the first 15 seconds, you'll see the core trap, 197.58 trap, 2 scalps plus 1 swing. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today, with exact triggers and invalidation levels that separate the pros from the panicked herd. My session bias is clear. This is a sell-on strength environment until we reclaim the 202.11 resistance, period. The daily chart is in a strong sell trend. ADX is screaming at 43.87, MACD is deeply negative at -3.78, and price is trading below the 5, 10, 20, 50, and even the 100-day moving average. That's a waterfall of overhead supply. But the weekly is neutral and the monthly is a strong buy, which tells me we are in a violent correction inside a secular bull trend, and that's exactly where liquidity traps are born. The single invalidation level that flips the entire structure is 193.09. Write this number down. If we get a daily close below 193, the 200-day moving average at 188.25 becomes a magnet and the monthly trend gets challenged for the first time in months. Right now, the herd is positioned long, still clinging to the AI demand story, and that means stop losses are clustered just under the 196.59 support. That's the fuel for the next leg. Let's walk the chart from the weekly and daily down to the 4-hour and 60-minute, exactly as I see it on my screens. On the weekly, NVIDIA has been coiling in a neutral range for several weeks, essentially digesting the prior parabolic run. The weekly 20-period moving average sits up at 204.06, and price is now firmly below it. This is the first bearish cross signal on the weekly in months. The weekly MACD is starting to roll over, but it hasn't crossed negative yet, which is why I call this neutral. It's a slowdown, not a breakdown. Yet, drop to the daily, and the picture gets aggressive. The daily trend is a strong sell, with the ADX above 43 confirming momentum behind the move. The 5-day moving average at 198.29 and the 10-day at 199.82 are both capping any intraday bounce. The 50-day at 204.43 and the 20-day at 204.06 are so far above that any rally toward 202.11 will be met with a wall of sellers. The daily RSI at 43.25 is not oversold, meaning there is still room to fall before we see any exhaustion. Stochastic is at 28 and pointing lower. Williams %R is at -42. That's trend continuation, not a reversal signal. The daily MACD is deep in negative territory, with no bullish divergence in sight. This is a clean bearish momentum structure. Now, the 4-hour chart shows a sequence of lower highs and lower lows, with price rejecting the 60-period MA repeatedly. The 4-hour 20 MA is sloping down steeply from 201.50 area. On the 60-minute, we have a neutral short-term oscillator structure, which means intraday we could see a small consolidation or a fake-out pop before the next drop. That's the scalper's playground. Key support is layered. First, the S1 pivot support at 196.59, then the structural floor at 193.09, and below that the critical 200-day moving average at 188.25. Resistance is stacked, 198.61 pivot, 202.1101, and then the big zone between 204 and 207.63. Here's what most traders miss. The volume profile node shows massive liquidity resting between 194 and 192, exactly where stops from late longs will get run. That's the liquidity grab-aisle trade. The last 24 hours have been a fundamental wrecking ball for chip stocks. The core news is a double tap. OpenAI touting significant efficiency gains that reduce the amount of compute needed per inference, and Meta shifting a chunk of its cloud infrastructure away from traditional GPU-heavy architectures. The market is reading this as a direct threat to NVIDIA's demand supercycle. When you add that the broader S&P 500 is grappling with sticky yields and a cautious Fed, risk appetite is draining fast. The Nasdaq futures are leading the decline, and NVIDIA, as the AI kingpin, is acting as the beta multiplier on the way down. Bond yields are steady, but the dollar is firm, which historically weighs on high multiple tech names. For the next 1 to 2 weeks, I lean bearish on NVIDIA unless it can reclaim and hold the 202.11 pivot on a daily close. The invalidation event for this bearish lean? A daily close back above 204.06, the 20-day moving average. That would tell me the bull trend is reloading. Until then, I'm selling rallies. Do you think NVIDIA breaks below 190 this week? Comment yes or no. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. I've engineered 2 scalp plays to exploit intraday traps, and 1 session swing that aligns with the dominant daily trend. Every setup has an exact on-screen trading plan graphic that I'll show as I speak. You'll see entry, stop, targets, and invalidation on screen. Strategy 1, the opening scalp, scalping, fading the bounce. This is a high probability short scalp from the pivot zone. The playbook. After the early session noise, if price pops to the 198.61 pivot resistance area and prints a 5-minute bearish engulfing candle rejecting that level, that's our trigger. Entry exactly at 198.50, with a stop loss at 199.10, just above the psychological 199 and the 5-minute high. The target is a quick drop back to 197.20, which is just above the current price and below the MA5, giving a solid 1 minute and 1.6 seconds risk-reward. If momentum accelerates, a second take profit at 196.60 sits right at the S1 support. This scalp is instantly void if the 5-minute candle closes above 199.20. That signals the bouncer's juice and the pivot is lost. The opening SCLP entry, 198.50, 5M bearish engulfing at pivot, stop loss. 199.10 take profit 1, 197.20 take profit 2, 196.60 risk, reward, 1:1.6 R 1:3.2 R invalidation, void if 5M close above 199.20. Strategy 2, the liquidity grab, scalping, counter noise long. This is the classic stop hunt reversal. The zone is right below the S1 support at 196.59. The market knows stops are clustered there. I want to see a sharp spike lower on the 1-minute or 5-minute chart that breaks 196.50, sweeps liquidity, and immediately snaps back above 196.60 with a bullish engulfing candle. That's the trap. Entry on the confirmation close above 196.65, stop loss at 195.90, tight, just below the wick and below any further liquidity. The target is a fast move back into the intraday value area at 197.80, which is near the open price and the MA5. This is a one target only scalp. Take your profit and walk away. It's a counter trend play, so fast execution is everything. Invalidation if the 5-minute candle closes back below 196.20, that means the trap failed and the sell side is real. The liquidity grab entry, 196.65, 1M5M bullish engulfing after spike below 196.50, stop loss, 195.90 take profit 1, 197.80 risk, reward, 1:1.5 R invalidation, void if 5M close below 196.20. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing, trend alignment short. This swing trade is designed to capture the next leg of the daily strong sell. The trigger is a 4-hour candle close below the 193.09 support. That level is the S2 pivot and the neckline of the recent range. Once it breaks, the 200-day moving average at 188.25 becomes the high probability target. Entry on the break and retest. After a 4H close below 193.09, I'll wait for a shallow pullback to the 193.50 area that fails, then enter short at 193.40. Stop loss goes at 196.70, just above the broken S1 support that now acts as resistance and above the daily pivot. This gives the trade room to breathe through a false move. First take profit is 188.50, just above the 200-day MA, for a solid 1 minute and 2.8 seconds risk-reward. The stretch target sits at 185.00, where the next volume shelf lies. Once price reaches halfway to TP1, I'll move the stop to break-even and trail using the 4H20 MA. The entire medium-term bearish view is invalidated if we get a daily close back above 198.61. That would reclaim the pivot and trap early shorts the session SWNG entry, 193.40, after 4 hours closed below 193.09 and failed retest, stop loss, 196.70 take profit 1, 188.50 take profit 2, 185.00 risk, air reward, 1:2.8R 1:4.2R invalidation. Daily close above 198.61, this is non-negotiable. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk because you're trading noise. Keep your size small on the liquidity grab. It's a counter-trend snipe. No positions through high-impact news like FedSpeak or surprise AI headlines. Stops are absolute. If a stop hits, you walk away. That discipline is exactly how you survive to trade the next 200-day test when everyone else is wiped out. So here's the most critical level for the next session, 193.09. A daily close below that number changes the entire monthly trend structure and unleashes a probable freefall toward 188 and potentially 185. That's the cliff. Tomorrow, I'll be watching the 4-hour close relative to that level and the reaction at the 200-day MA. If 193 breaks, the whole AI bull thesis takes a body blow and I'll have the updated blueprint exactly 24 hours from now, right here. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen and loop right into that analysis. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter before the move.